Hello everyone and welcome to a new video ATFX Connect. My name is Gonzalo Canete and I'm here to give you a quick report of the end of the week. Remember, I'm just updating you every single morning on our newsletter, on our blog. I'm just keeping a good quick review of all global events in the last 24 hours and give you a summary of all freshly in your email, completely free. And the main consequence on the financial markets. We touch equity, fixed income, commodity, currencies, plus also cryptos. And today I'm gonna give you an update on all of those assets. So let's start with the screen. So going to the calendar and going to my notes, I was just checking and making a few draft notes. What was the most important data and events during the week? And I will say probably the most important, it was Thursday. We got also early this week the PMI from Europe, and it was actually really bad. I mean, we see France and Germany showing a drop in manufacturing sector, in also service sector. United Kingdom was doing not so bad. It was actually doing well, especially particularly the service sector was growing, but the rest, France, Germany, service and manufacturing sector are in contraction, confirming what we have been talking in the previous videos, which is a recession in Europe. And this is the funny thing, a recession in Europe with European markets touching new maximum levels. As you can see on the screen, DAX 40, the biggest index, equity index in Europe, is touching again new top records, almost in 16,000 points. Now, let's go deeply to see what was the main events on Thursday. I told you, to me, in my eyes, Thursday was the most important day for two reasons. It was the United States GDP growth rate review for Q4, and it was also the speech of Christine Lagarde, the President of Central Bank of Europe. And both events were interesting. Even although when Christine Lagarde was doing a speech with no main chains, still, you know, when someone is telling to you more by the things they are not telling you than by the things that they are actually speaking of. This was one of those occasions, right? I'm gonna give to you a few key points on that speech she gave and what was the perception of all. Now, coming back to the main data, the growth rate from Thursday, the growth rate on GDP, and also on Friday today, by the time I'm doing this video, it was the PCE, the favorite inflation indicator, the favorite inflation rate by the Federal Reserve, which it was actually the core PCE annualized. It was 2.9% while the expectation was 3%, which means actually good, because it means like inflation is still dropping, lower than going to lower levels than expected, which is super good, because it means it translates like less monetary pressure on Federal Reserve, which can take a more flexible position for the financial markets, which is exactly what Wall Street wants. And maybe that's the reason why the markets are still going really hard on this, which is good. It's positive for equity market. But still keep an eye on this. Now, the growth rate on the United States was published on Thursday. We got it. I know the reference because I obviously take my notes to give to you the best reports, right? But I want to also show you on screen. It's here. GDP Q4 3.3 versus the expectation was 2%. With 3.3, keep in mind the previous period, Q3 of 2023, the growth rate was 4.9%. Amazing, unbelievable. It's almost a growth rate more common in Asian economies than United States. United States probably got a benchmark in or mirror in European economies, West economies, in Europe, United Kingdom. And if you take a look on those economies, they are not growing, my friends. They are growing actually in a negative growth rate of minus 0.1% for European area, and minus 0.1% is the growth rate for the last quarter for France, for Germany, if I'm not wrong, either 0% or minus 0.1%. In any case, super sad, super bad, right? And still, the market, European market, is rising. So I don't trust that movements at all. I think it's gonna cause a kind of surprise, and I got the feeling that it was overbought and completely inflated, artificially inflated. Now, reviewing the effects of this data on the market from United States. First of all, as we mentioned already, equity is doing super well. Everything is going fine. But if we take a look also on the bonds, 2-year bond from the United States. This is Thursday. Let's go deeply to Thursday. Thursday, it was doing this movement, this nice movement. Can I draw on this? I think I can draw on the screen with this tool. Let me try, because I installed recently. Yeah, all of this drop on the US bond was caused by the growth rate of the United States. I believe that's the reason why. It's not only because the equity was rising, but also because if you see that the economy is growing at 3.3% growth rate, obviously the conclusion that you're obviously gonna take is, well, things are not going bad. And if they are not going bad, it means actually that I should maybe put my savings in those sovereign debt of those countries. I mean, mainly US bond is what is called risk-free bond, which is the safest bond that you can buy in the world, right? Because they got also the machine to print the money out. So as Alan Greenspan said in one interview many years ago, we could never run out of money to pay our debts, because we can always print out more money to pay our debts. That was Alan Greenspan, ex-president of Federal Reserve, the wizard, Merlin in Wall Street. Anyways, the movement on bond was good. Demand of the bond was rising, therefore the yield was dropping. Now it's recovering more or less the main levels that they got initially, and it's even forming a kind of a bullish pattern here. But let's not take a look on that yet, because probably we need to see many different changes before this happens. So we're gonna keep an eye on it the coming days. But so far everything seems to be calm. Dollar index. The dollar, it was actually rising. Now it's dropping in the session of today, and as you can see, it's doing a kind of lateral movement, but still it seems to be strong, because it's resisting over the 103 points level and in a kind of range of 103 to 103.80. But if the pattern after all this bullish pattern touch the targets, we're probably gonna see a dollar keep rising up. And if the dollar is rising up, what is gonna drop is, as it should be, I mean, naturally, that will be the natural result of a European economy in a recession and US economy going strong. The relation between euro-dollar should be a euro weaker and weaker against the dollar, and therefore a bearish relation, drops on euro-dollar quotation, probably to those levels. The main target will be 105 over here, 105, right? The proper drop, the collapse of these two bullish trends, collapse, break out the main trend and collapse and go to the source of the movement, which is 105, which is a super old and big long-term reference for as a support. Yeah, moving forward, another interesting point I will mention to you, it's in the report I did today, I also include a link. The link is just the post I put yesterday evening during the speech of Christine Lagarde. So you can access to the main comment she did. It's here. You can read the main quotes, the highlights. I was just taking a few notes and also giving to you a few comments about what's the reaction of the market and what's the main things she was saying. Regardless that comments, which is not so rich in many different sense, she mentioned inflation, she mentioned the need of fiscal measures, she mentioned blah 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 blah. But here's the interesting thing, right? And I was reading this, I think in Think ING this morning, Think ING report bank. I read few things on the report they did that it was actually very interesting. They say that in November, let me just check where it is exactly the comments. They say, when asked if she will reiterate her prediction that rate reduction by the summer were likely, which she said last week in Davos, Christine Lagarde stated that she always stands by her statements. We do recall that in November last year, pay attention to this please, November last year, Christine Lagarde stated that the European Central Bank will not lower interest rates in the coming couple of quarters. Well, if that's true, it means, like, taking consideration the next couple of quarters, it means the end of June, the end of the second quarter. And therefore, based on, first of all, she said yesterday, the board never discussed the option of interest rate cuts. It's not still on the table. They are not talking about that at all, based on what she's saying to the journalist. Plus, also the comment she did that for the next 2 quarters, there is not going to be any interest rates cuts by Europe. It means we should expect the interest rate cuts in any case after June, so by July, best scenario. And that's important because based on that comments, we can start to get a kind of clear picture about what's going to happen. Still, the market is discounting certain movements and so on. But as you can see, market is positive right now. It's optimistic. SP 500, DAX, even Nasdaq is not doing bad. Still in certain top levels. What is interesting, talking about equity, and before we jump to commodity or we jump to currencies, what is interesting is also mention what happens during this week on Hang Seng, on the two Chinese, mainly Chinese equity index. One is Hang Seng, the other one is Shanghai Composite. And you can see Hang Seng was rising really well, and Shanghai Composite was rising too. From, attention please, from minimums of 2022. Chinese exchange was, I mean, the equity in China was dropping for the last month and a half, strongly, super strongly, which is not a good sign. But the measures announced by the government, which is, I read on Wednesday, there was a rumor estimation of 278,000 millions of dollars, equivalent yuans, on measures for stimulus the economy, plus the decision by the Popular Bank of China, which is the reduce of the rate coefficients for the banks, and also interest rates, coming interest rate cuts from Popular Bank of China, which means more liquidity for the market. Had on the top of that the flexibility announced for real estate sector and industries. Flexibility means like also postponed or prolonged the debt on real estate, which make them more flexible, the payments, and also distress this sector. All of these measures seems to be received positively by the market because the market was rising really well. Now, coming back, we need to talk about commodities. Gold is dropping because dollar is still keeping it strong. So that's why you got gold in $2017 per ounce and below 2050, which is more or less their main reference here. Oil is rising, but still little by little. I will say that we still got certain issues on Middle East. I have seen a few announcements by OPEC, by the producers of oil, recently, but it's nothing crazy, it's nothing explosive. The movement of the price of oil, if you take a look on long term, it doesn't seem to be nothing impressive, right? So let's take a look on this. You got certain resistance close and above, and mainly we didn't see anything crazy in the Middle East situation, except that they are just in the same situation. You got the United States and UK attacking Yemeni coast. You also got Houthis that is still attacking the boats from US. Actually, I read yesterday, I believe it was one article mentioned that a few boats were protecting one massive boat. And after the attacks, one of the US boats apparently was impacted by one of those missiles, ballistic missiles. And then, therefore, the commercial civilian trade boat was just turning back and find another way to drive, which means like they are actually not controlling so much. I said on social networks also the video of Joe Biden asking by a journalist if it was working, the attacks to Yemen was working or successful, and he said, if you are asking me if they're gonna stop them to attack us, no. Are they gonna continue? Yes. Which means really bad statement to just bring the market some kind of good vibrations or feelings, right? In this case, doesn't seem like nothing is working. So oil is rising just little bit. Well, we will believe it when we will see that it's actually breaking up certain resistance recently done. So about $90 per barrel, $85-90 will be interesting, but so far nothing interesting here. Bitcoin, the last one, is rising again. Take a look on this. $41,866. I told you that Bitcoin was doing really well because first of all, they got two levels of support coming, and look how well it is working that first line. Although the second line was here and it was almost touched, but it's doing really well. Like I told you, in 2023, market was dropping, Bitcoin was rising. Market was rising, Bitcoin was rising. It was the first year that Bitcoin was actually working as a kind of safe haven asset more than a financial asset like the previous years. The previous years, market was rising, Bitcoin was rising, market was dropping, Bitcoin was dropping. Not anymore, and Bitcoin seems to be working right now like a proper digital gold. Let's see how for how long is this happening. Okay, I think this is all. I hope you enjoy this video report for the end of the week, and remember, if you like this, please subscribe. What is the button? Please subscribe, give me a thumb up, and also you got my contact here. Whatever you need, you want, I had you on my newsletter, is completely free. I'm sending every morning a summary of the market of the last 24 hours related with all, even geopolitics, the last news related with Middle East, the Ukrainian war, and so on. Just send me an email and I'm gonna include you in my newsletter. Okay, that's all from me. Take care and see you in the next reports. Bye bye.